Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Wednesday, October 5th. Sentiment among global investors seems to be growing more positive, on renewed hopes for concrete steps to tackle the sovereign debt crisis. Yesterday afternoon, the Financial Times reported that European Union finance ministers are looking for ways to recapitalize financial institutions. There's no specific plan yet, but leaders reportedly concluded that they haven't done enough to assure the markets that European banks can withstand the current crisis. And they agreed that more coordinated measures are needed to prop up those banks. That report helped U.S. stocks rebound from steep earlier losses yesterday and finish the session with solid gains. But European markets are faring even better this morning. Germany's DAX index is leading the way with a gain of 3.5%.
The markets are largely shrugging off a downgrade of Italian government debt by Moody's investor service. Moody's cut the bonds by 3 notches and placed a negative outlook on the rating, citing rising long-term funding risks for Eurozone countries like Italy with high levels of public debt. Turning to the domestic economy, investors are digesting the latest news on the labor market. Payroll processing firm ADP reported that private U.S. employers added 91,000 jobs last month. And according to outplacement firm Challenger Gray & Christmas, companies laid off more than 115,000 workers. The data come ahead of Friday's big government employment report, which is expected to show approximately 65,000 non-farm jobs added in September. Any positive number will be better than the August report, which showed 0 job creation. Later this morning, we'll get a look at the services sector when the Institute for Supply Management releases its non-manufacturing index for September.
Checking in on the asset markets, we're seeing a slight pullback by the dollar against most of its major rivals. But the greenback is still advancing against the euro, which is now sinking back toward $1.33. But the biggest move may be in the energy markets. Oil prices are surging more than $2 to nearly $78 a barrel. The advance comes after the American Petroleum Institute reported an unexpected decline in U.S. crude supplies. Later today, the Energy Information Administration will release its own gauge of weekly fuel inventories. One company that's heavily affected by energy prices is the agricultural products giant Monsanto. It's rising nearly 3% ahead of the bell, after reporting a smaller quarterly loss than in the same period last year. Meanwhile, Monsanto sales jumped above $2 billion.
We're also keeping an eye on shares of Costco Wholesale this morning. The warehouse store chain posted a 10% increase in fiscal fourth quarter net income, and same-store sales rose 12%. Meanwhile, Yum Brands is dropping nearly 2% in the pre-market. After yesterday's closing bell, the parent of the KFC, Taco Bell, and Pizza Hut chains reported earnings and sales slightly ahead of expectations. But in the U.S. market, operating profit fell 16% and sales dropped 3%. And finally, we're watching shares of Bank of New York Mellon. New York's Attorney General filed a lawsuit saying the bank defrauded clients by charging inflated fees for foreign currency transactions. Bank of New York Mellon said it will vigorously defend itself against the charges. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.